Yeah, hello and welcome to another update video about gold. Let's take a look at another updated technical analysis. Lots happening in the gold market at the moment. We are coming down here at the moment as expected. In the last video I already talked about my expectation that we will come down lower. First I talked about it in my cryptocurrency PAX G video back in February, where we were at around $2,000 and where I told the viewers of my my main channel, More Crypto Online, that I would expect a gold price between $1,700 and $1,722 and $1,600. And this is exactly where we're heading at the moment, and we already reached pretty much target. So we're going to take a look at that in a minute. First, we start with a bigger picture here. And this is an Elliott wave count. Yeah, this is where we started back in here 1980 with a large wave 1. We came down in a wave 2 here in the 2000s. We moved up in a wave 3. 2011 came down in a 4, and we are now moving up in a 5. And within this wave 5 in blue, we can also count 5 waves, 1, 2, 3. We are now in 4 with this dip, and we will come up in a 5. That is at the moment my primary expectation. We're also going to talk about what needs to happen to invalidate the primary expectation, because then we can expect some very interesting prices. Good or bad, I don't know, but we'll talk about that in a minute. But then overall, let's go to the daily chart. Last video, we were, I think, somewhere around 1770 or something. Yeah, I told you that this move down is probably not yet finished. I would still expect the price to reach here the green target range between 1600 and 1722 or 1720. Why this target range? Well, because if we are in a wave 4 here in yellow, you would expect the price to retrace into the area between the 50% Fibonacci retracement level and the 38.2% Fib level, and that is between 1600 and 1720. When I talked about this for the first time, we were just moving up here. Everybody expected a crazy gold price due to inflation and whatever, and here we can see very nicely how a lot of the generally across the markets at the moment, we see a lot of the historically promoted correlations breaking. Yeah, they are breaking. So a lot of these correlations, which I never like correlations because they come and go. And here we can see a correlation again being destroyed. Yeah, the assumption that the gold price is tied to inflation, and it is just not true. And I believe it never was. It sometimes is, it sometimes isn't. Correlations come and go. You can't trust them. Same way as you can't trust the correlation between Bitcoin and the Nasdaq. Yeah, this was never the case. Only when, only after 2020 it started really. So it is stuff that comes and goes. Therefore, it is best to analyze each price chart individually. Gives you the best picture, and you can stay most objective. But yeah, we were at 2000. I told you we will come down here. That was primary expectation. It is working out. Is this already over? By the way, in this wave 4, you have 3 main waves, A, B, and C. We are now in the C wave. Within the C wave, I believe we are sort of towards the end. Yeah, we can see a 5-wave move coming down here. In this 5-wave move, where are we there? Let's take a look, and we go for that to the 2-hour chart. And where we started here, this first wave down. Yeah, we've started that first wave down. We then moved up in a wave 2. Now we can calculate target for the wave 3 to get an idea is wave 3 already complete. To do that, we start at the wave 1, go all the way up to the wave 2. Didn't do that very accurately. There you go. And what you normally expect for a wave 3 is the 1.618 Fibonacci extension level. That was at 1738. You can see that was reached perfectly. Yeah. So you would normally expect for the wave 3, and it differs a little bit depending on which asset you're looking at. They're always a bit different. Altcoins, for example, in a wave 3, cryptos, they normally do a little bit more than the 1.618 in a wave 3. Gold usually adheres very well to it. And you would normally expect somewhere between the 1.618 extension and the 200% extension. And that was reached. We then retraced in a wave 4. So let's take a look if the wave 4 is already over. as I always say, a wave 4 normally retraces into the region between the 38.2% Fibonacci level and the 50%. Now, what it needs to do is the 23.6% Fib level. So we can formulate a target now for the wave 4, which is a bit higher. So I think we'll see a little bit of a recovery now in a wave 4. That can take different shapes. So that could be just a simple ABC. That could be a triangle, yeah, where we'll probably not see a higher price, yeah. But what you would normally expect is here the region between the 23.6% level and the 38.2. Again, it can go all the way up to the 50% level. So between 1760 and 1796. That is where we would expect the price to get into. The 23.6% Fib level here, 1761, is the minimum it would need to do in the wave 4, ideally. So it's never 100%, but yeah, 95%. It should get to the 23.6% Fib level. Very likely would be a move to the 38.2 level at 1780. Not that likely, I think, is a move to the 50% Fib level, but if it does, it would not invalidate anything here. It must not go higher than 1805. Then it would come into the price range of the wave 1. That would be not allowed. Then it is something different. And then we have to assume that the low was already in. But for now, I have no reason to believe that the low for gold was already in. You can see at the moment no bullish price action. This looks very corrective. It looks actually like a trend continuation pattern as well. If you look at it from a traditional TA point of view, something like a range, like a rectangle pattern, a bear flag you might call it, yeah. But I would expect a little bit more of a retracement to the upside before it then comes down in a wave 5. And here we've got the wave 5 target, which depends a little bit on how high wave 4 will go. One target for the wave 5, to be more specific, obviously I've put this green area here based on the retracement, the larger retracement area for the larger wave 4. But now that we have those subwaves, we can also calculate that a little bit more specifically by looking at the length of the wave 1. Now we don't know yet how high wave 4 will go. So let's say we reach the 38.2% Fib level. Then we would have one target, the $1,700 level. That would be ideal target, the 1-to-1 ratio with wave 1. Another target which makes sense is the 1.618 extension. So if the 1700 fall, then the 1653 level here, the 1.618 extension would be quite likely. That would be the next likely target. So as you can probably hear, I do expect primarily more downside, even though we pretty much reached my target. I mean, bear in mind, I mentioned that back in February where everybody was super bullish on gold. I talked about that 1720 level. We've reached 1725. For me, that is reached already. Even if we go up from here, I think that was a success. However, primarily, if we look at the shorter time frame Elliott wave count, I would still expect lower prices. Now, when we then reverse back to the upside, somewhere from in here, we would expect prices, obviously, a new all-time high prices for gold. And in here somewhere, I would expect the very long correction that gold is doing or has been doing to find an end. Because all of this here was a corrective wave structure. Also, you can see that by just looking at the, let me just do that, go to the weekly chart. Yeah, where we had here even from that high, so we had this high here to this high, even though it's a very weak one, but it's a bearish divergence on the weekly. And this is a similar situation that we had with Bitcoin as well, where we had this overshooting wave B. Now there's one more thing to mention. In this retracement here, I just gave you target areas for the fifth wave within the fourth wave. If we go below this green area, and I'm talking here about substantially breaking it to the downside, then we have to expect much lower prices. In the last video, I already talked about this crucial level here, the 1330 level, no, 1377, sorry. But actually what you would expect if we go below this area and break below the 50% retracement, I'm not talking about short term, yeah, so if we, you know, maybe recover it on the next day, it's not a problem. But if we close a weekly candle below that $1,600 level, it's very unlikely that it's still a wave 4, and we will then have to expect prices possibly in the 3-digit range. Now, I'm not primarily expecting this, please don't misunderstand me, but if this happens, we can expect a lot of downside for gold. Yeah, because then this is not a wave 4, it is then something else, and this will mean that all of this, yeah, was not an A, B, C. Then we have to assume that that wave 5 in yellow was already in here, even though if we didn't make a new all-time high, we basically got to the same height as wave 3, basically truncation. A shorter wave 5 happens, is rare, but then you have to expect that all of this will be corrected down, all of this. Yeah, again, that would be a bit of a disaster. Again, that would indicate that this whole cycle that we've seen, this whole cycle will be corrected. That will be a massive move down. Normally you would only expect this as soon as we've hit this wave 5, but if we go below below $1,600, that will be a first warning sign, and if we don't recover quickly, I would expect a 3-digit gold price. So you hear it here, now that I say it, but I don't primarily expect it, but we have to assume it will happen if we go below $1,600 and stay there for a few days, yeah, and don't recover quickly, and you see maybe a retest of that level from the downside. Not good, not good. So for now, again, no sign that this recovery, that this retracement is ending. Looking at the indicators as well, just briefly here on the ADX, you can see the red line going above the green line. That indicates short signal. The RSI dropping, yeah, dropping, indicating no bullish momentum at the moment. It is going to get probably into that oversold range here, and also on the weekly here, the MACD increasing negative momentum. There is no sign of a reversal as of yet. On the daily chart, we can also check those indicators. Similar picture, yeah, even though here we are already in the oversold range, but that makes sense. You know, we are oversold. You would normally consider this a reversal signal. That makes sense because we expect now a little bit of a move up, yeah, in this lower level wave 4 before we then come down into this green area. So from that point of view, it all adds up at the moment. And in one of the next videos, I will analyze silver as well. Let me know if you want me to do that in the comments. So hopefully you liked the update about gold. If you did, please hit the like button, leave a comment, subscribe. And if you really like the content, then yeah, check out my main channel, More Crypto Online. Thanks a lot for watching. Bye-bye.